This is Matthew Cratter from Trader University, and today I want to answer the question, what happens if all the governments shut down all of the crypto exchanges? This was a question that Farsa Dentis asked in one of my YouTube comments last week, and I think it's a really good question, so I want to address it from a couple angles. First angle is, of course, it's highly unlikely that we do see a global ban. This would require a lot of coordination between countries that don't get along very well with each other, like the US and China and Russia, for example, as well as some other countries. So it's highly unlikely to see a coordinated ban. And a lot of countries realize this. China made a big mistake when they banned Bitcoin mining and shut down their crypto exchanges. It really shot itself in the foot. There are reasons it had to do it, obviously, to prevent capital from flowing out of a closed system. But in the process, this has been a huge geostrategic blunder, I would say. And the U.S. has hugely benefited from this as we've gotten a lot of Bitcoin miners moving here. And hopefully this country remains relatively free and a hospitable place to Bitcoin mining. Certainly it's less easy to shut down Bitcoin mining here than it is in a system like that run by the Chinese Communist Party. So capital, brains, smart people will continue to move and migrate to countries that are friendly to Bitcoin. And so El Salvador has been very smart by making Bitcoin legal tender and getting rid of Bitcoin taxes and encouraging Bitcoiners to move there. That should be very good for their economy. But let's grant the premise for the purposes of this video. What if all the governments actually got together and shut down Bitcoin, shut down all the crypto exchanges, so you could no longer convert your Bitcoin back into fiat, into US dollars or euros or yen? It's important to point out that Bitcoin itself cannot be shut down. It's peer-to-peer technology. You can send it to anyone in exchange for goods and services. If you hold your own keys, if you have a wallet and you hold your own keys, you can just send Bitcoin to any Bitcoin address in the world, and you don't need to ask your banker's permission. You don't need to ask the U.S. banking system's permission or a politician's permission. You're completely free. And so we're already seeing places like El Salvador that are developing circular Bitcoin economies where you can both earn in Bitcoin and spend in Bitcoin. And to the extent that you have a circular Bitcoin economy, you don't even need to convert back into fiat dollars. You can just stay in Bitcoin. You can spend sats, you can earn sats. And this is what we mean by Bitcoin circular economy. And so if there were no Bitcoin or crypto exchanges, you could still exchange your crypto or Bitcoin with other people for goods and services to the extent that it was decentralized and couldn't be shut down. Something like XRP or Ethereum is much easier to shut down. The actual network. Bitcoin is much more robust, obviously. Now, can Bitcoin, this is a question I often get, can Bitcoin really be used as money? Is it really money without the government's permission? This is a very modern view of money, a 20th century view of money, saying that we somehow need the government to tell us what money is. Obviously, the government gets to decide what legal tender is, but people use their own forms of money without the government's permission. And a very localized, small example would be, for example, in the prison system, cigarettes and other small trinkets like that are often used as money. They function as money, not outside of that local circular economy, but within the prison economy. And so we don't need the government's permission to tell us what money is. So, for example, a nugget of gold is still money. Basically, in any country in the world, you can exchange it for goods and services without the government's permission. And this is not just because the world used to be on a gold standard, but much of the world was on a gold standard, and governments used to recognize gold as money. It's because something that's special about gold. Gold nuggets were used as money before governments even existed, as were various other forms of money like giant stones, seashells, glass beads, what are called wampum. And these were all used as money and were competing with gold and silver and other commodities to be money. But something very interesting happened. Wampum, seashells, glass beads, these things disappeared as money because the supply was inflated. It was used by Native Americans for trade and for ceremonial purposes. But then when Europeans came over and realized that they could actually buy stuff using wampum, and their accounts that may or may not be true about, for example, Manhattan Island being purchased using wampum, whether that's true or not, we do know that there was trade in wampum between American settlers and the Native Americans or Indians here. But with the introduction of European mechanized production, it became very easy to create wampum using machines and using people assembly lines. And it turned out to be a very soft form of money, which just means that soft money is money that's easy to make more of. Hard money is money that's difficult to make more of. The current US dollar is obviously very soft money. It can be printed up just with the flick of a keystroke. Hard money is something like gold or Bitcoin. Gold is very difficult to mine. It's very expensive to mine. Even in response to higher market prices, it's very difficult to increase the existing supply of gold. And it's much, much more difficult to increase the existing supply of Bitcoin. Bitcoin has a perfectly inelastic supply schedule, which just means that it doesn't matter how high the price gets, you're unable, and everyone's unable to mine anymore. So until the next halving, there will be about 6.25 Bitcoin mined with every new block. Every new block will come on average every 10 minutes, and this can't really be changed because of the difficulty adjustment. And so you have this constant issuance of Bitcoin, and you can't make more, you can't accelerate the monetary issuance schedule even in response to higher prices. This is one reason that Bitcoin has this property of always going up. So as we said, something like wampum, basically it was hyperinflated out of existence. The Europeans and early Americans just printed a bunch of it, quote unquote, printed a bunch of it. This is much more difficult to do with gold, as we said. Basically, the whole world was on a gold standard by the 18th and 19th centuries. Silver was used also as a form of money, but it was more used to make change, kind of as smaller denominations. And this is what happened when the hardest money in the world met all these other soft forms of money. The whole world collectively, without coordination, just by seeking out the hardest form of money, drove out softer forms of money like seashells and wampum and glass beads and things like this. This is what happens when hard money meets soft money. The hardest money wins. And this happens without governments having to give their permission. So what does this have to do with governments closing crypto exchanges? Well, you can close all the regulated crypto exchanges and Bitcoin exchanges, but you cannot stop people from seeking out the hardest form of money. And this is what happened with gold and why the whole world moved to a gold standard by the end of the 19th century. If you ban Bitcoin exchanges, people will still use it to store value and to hedge against currency devaluation. And they'll continue to use it as well to trade with one another online and in person, even without Bitcoin exchanges. Bitcoin is now so widely distributed. So many people own it. Something like 40 million Americans own it. People in countries like Nigeria, it's even more widely held. Countries like El Salvador, etc. And so this will continue. Bitcoin will be continued to be used by the people no matter what the overlords decree. Bitcoin is peer-to-peer. It cannot be stopped. And I think this whole question actually, I think it's a very good question, but it does betray a new coiner or altcoiner's mindset. When you say what happens if the government shut down all the exchanges so we can never cash out on our crypto or cash out our crypto, this is really how people think who have a much shorter time horizon or very high time preferences. Altcoiners all need ultimately to cash out their cryptos because they unconsciously recognize that all of them are going to zero or trending to zero and are going to even crash someday. And just this idea of having to trade back out of your cryptocurrency, this tells you that you're an altcoiner or that you're a very new Bitcoiner, because Bitcoin is actually real money. It's the hardest form of money. It's the scarcest form of money that the world has ever seen. It has this inelastic supply where you cannot produce more, even in response to higher prices. And as such, as the hardest form of money, there's no reason to ever cash out of Bitcoin. When you buy Bitcoin, you're doing the opposite. You're opting out of the current dirty, corrupt financial system. So why would you ever want to go back? If you're trading XRP, if you're trading dog coins, obviously you're playing a very different game. You may think that you're in the same business as Bitcoiners, but you think about the world very differently. And this idea of cashing out is something that it even took me as a Bitcoiner many months to figure out, that there was to be no cashing out. Michael Saylor, I think I probably learned this point from one of his podcasts or interviews. He gives a great example of the Venezuelan bolivar or Zimbabwe dollars. And if you're living in one of these countries, you try to spend your local money as quickly as possible or convert it to US dollars as a stronger store of value. And so he was saying, if you lived in one of these countries, what's the right time to cash out of US dollars and go back to bolivars or Zimbabwe dollars? And of course, it's a rhetorical question. The right time is never, because these are rapidly, the bolivar and the Zimbabwe dollar and a lot of these other currencies are very rapidly depreciating. The US dollar, maybe the Swiss franc, or the king of the fiat currencies, or the kings of the fiat currencies, they depreciate much less quickly. But even in the last couple of years, something like the US dollar has gone down 15, 20% a year in terms of its real purchasing power against real goods, against assets like houses and stocks. And so when you're trading into a harder form of money, the right time to cash out is never. You never, ever want to go back to wampum. And when you're in Bitcoin, US dollars look a lot like wampum. By contrast, Bitcoin is the hardest money in the history of the world. It's harder than gold, and it's soon to have a higher stock to flow than gold. It's much less easy to censor than gold as well. You can send it to anyone you want. You don't need anyone's permission. You can move a couple $1 billion around. You can move $100 billion around. It's very easy. Whereas gold and wampum, it's much more difficult to move it around on airplanes and ships. The other thing that people forget is, like gold, Bitcoin has a special property. It's what's called a bearer asset. When you have possession of it, it's yours, and there's no counterparty risk. You don't need anyone else's permission to keep it going. So it's much better than fiat cash. If you own some US dollar bills, they can be canceled by the US government. They can be marked as criminal money and not accepted as dirty bills, or whatever you want to call it. And even at a more fundamental level, the US dollar is a liability of someone else. It's a liability of the Federal Reserve. Bitcoin, again, is a bearer asset. It's nobody else's liability. If you take a look at a US dollar bill, you can see this at the top. It's a Federal Reserve note. And all US dollars, paper or digital, are liabilities of the Federal Reserve, which is the central bank in the US. And so this is what we're trying to get away from. We're trying to get away from money that needs someone's permission, especially central bankers, who tend to be the most unproductive, worthless kind of people. We don't want these people telling us that we can use our money or not. When we move to central bank digital currencies, CBDCs, they'll be able to be turned on and off with the flick of a button at the request of central bankers or bankers. And this is a very dystopic world. We want to make sure that we have an alternative parallel system, because when your money is someone else's liabilities, you're highly dependent on that other person or institution to keep the money going, to make good on it. Bitcoin, as I've said many times, is freedom money. It's the hardest form of money. It's the least censorable form of money because it has this peer-to-peer feature. When the tough times come, when governments begin to crack down, when regulators begin to crack down, and even as central banks continue to print fiat currencies, holders of US dollars and euros and yen and other fiat currencies, as well as cryptocurrency holders like Ethereum, people who hold ETH and Solana, Cardano, XRP, BNB, I don't have to go through the whole list. All these people are going to learn this the hard way, that their money is not hard, it's not uncensorable, and it's not freedom money. When I see Ethereum, all I can think of, this is wampum with smart contracts, and it's very easy to make more. Its monetary policy is very uncertain, and it's not money for the ages. It's not ultrasound money. It is more of a corporate form of money run by Vitalik Buterin and the Ethereum Foundation. By contrast, Bitcoin is freedom money. And when the forest fire comes and burns through fiat currencies and cryptocurrencies, we will realize what a strong oak Bitcoin is, standing there in the forest, resistant to censorship, resistant to money printing as well. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.